Hi guys, KP this side from InvestorWise. Hope all of you are doing good. So we are back with another video, a video which will be packed on with lots of information, and the vlog 44 which I did last week gave us some very good opportunities of making short-term returns. Although I never promise, never assure you of any returns in such a short span of time, because we never know how markets are going to behave. But yes, this time it clicked good for me. I am fortunate about it. And the first stock was Adani Enterprise. It has skyrocketed to 2750 levels. Ports, my target was done. The stock again came down to the levels of 715, 720. Right now it is trading around 725. If you bought it and you booked your profits at a higher level, it again creates more opportunities for you. You can buy it definitely. It's one of the best stocks in the Adani's group of companies, and the results for Adani Ports are going to come this week. Apart from that, Deepak Nitrite was another surprise, and it did the target. But from there again, if you remember, I told you 10 to 12% is the movement which I expect will happen soon in this stock. And from there again, it has dropped by 40 to 60 rupees. Right now it is trading close to 2070 odd levels. If you had it and you booked profits, very good. Otherwise, you can still continue holding it for 2150, 2200 levels. Fresh buying for the time being, stop. I'll give you another chemical sector stock today. Okay. Nasdaq, I told you, if it sustains above 12,200 levels, will go past 13,000 levels. Exactly on Friday, Nasdaq has done around 13,000 in spot market, and in futures, Nasdaq has done its all-time high. I think the 52 weeks high, sorry, it has done, which was, I think, around 14,000 something. Dow Jones is still struggling, but the last support for Dow Jones, which I told you would come around 32,800 levels. From that level, it has again bounced back, and it managed to hold on to 33,000 levels. But is 33,000 levels comforting for us? The answer is no, it's not comforting, because I told you very clearly, till the time Dow Jones is not convincingly going past 34,000 levels, we don't see Dow Jones in a very decisive point. Right now it's in that indecisive zone, which I told in my last video also. Anything between 32,800 to 34,000 is indecisive zone for me. Only above 34,000 is when I start feeling a good buying is going to happen in Dow Jones. Till that time, I am not very confident about it. I would consider it to be in an indecisive zone. Anything below 32,800 levels would make me negative about markets. Okay, so this is the basic gist I have given you about my last video. Now coming to today's video, I posted yesterday on my Facebook page and all other social media platforms that if you have anything in mind, you can always ask me your questions. Some of you don't feel comfortable asking me directly on WhatsApp, so you can drop me your questions and I will try to answer it during my vlog. So how are we placed today? The agenda of our today's discussion: few questions have been asked that I will try to answer today. The relevant ones I will answer today. Second is where do we stand on the debt ceiling in US markets? Third is where do we stand on the interest rates? How do we feel interest rates are going to play from here in the next 1 month or so? Its impact on the equity markets as a whole. Then we will discuss about the Indian equity markets, how I personally feel about the Indian equity markets, whether you need to exercise caution or you can go for frivolous buying into Indian equity. That I will answer. And then my picks in the coming week or so, what I personally like for the upcoming week. Okay, so a lot of things have to be discussed, guys. Just stay with me in this video. There are no shortcuts to making money. You have to spend time, learn things, get matured, learn the art of staying patient in this market. I still get questions. Why did I say I will only answer the relevant questions? Because still people are asking me, how do I make money on intraday basis? How do I make money on short-term basis? Why do you want to make money on intraday basis? Why do you want to do things going against the nature of how money works? Do you start a business saying from day one I have to make money in a business? Do you say that? Do you start a course saying that I want a degree in 1 day? Why is it only in equity markets that people want everything on a daily basis? Why is it? I don't understand. Do you go to the banks and tell them एक दिन के अंदर अगर फिक्स्ड डिपॉजिट मैच्योर्ड होगा तो कितना रुपया मिलेगा मेरे को? Do you talk like that? They will throw you out of the bank. Do you ask like this? What is the interest you're going to pay me on daily basis? सुबह मैं 1 लाख रुपया डिपॉजिट करूंगा, शाम को कितना लेके जा सकता हूं? Do you say that? Do you say I buy into SIPs? What is the morning NAV? What is the evening NAV? I want to see how much appreciation I can get within a day. You don't do that, right? Do you go to a doctor and say, okay, give me a medicine and I want to see results by end of this day, otherwise you're not a good doctor, I'm not going to come back to you, I'll file a case on you? Do you say that? So why is it only in equity markets you want everything on daily basis, एक ही दिन के अंदर चाहिए? And then you have these people, right, who are sitting there to cater to these unrealistic thoughts of yours. There are people, there are influencers on YouTube who come and say, हाँ ऐसा हो सकता है, मेरा कोर्स कर लो, मेरे से सर्विसेज ले लो, and that is when you will make returns on intraday basis. And exactly that is what you're looking for. So you by yourself are telling people, come make a fool out of me, come make a fool out of me, because I have zero knowledge about anything about equity. And I don't want to follow what KP is saying. So you want that kind of people who come and cater to this, endorse this kind of a foolish thought of yours, where they come and tell you, yes, we have strategies, boys. We have strategies which can make you return in one day. So what if people didn't do that in last 5 decades? But I have suddenly come up with something by divine powers which Almighty has showered on me. I have these powers where I exactly know in the morning what stocks are going to perform, so I take a long position on them. What stocks are not going to perform, so I take a short position on them. And you say, yeah, this is the person I was looking for. This is the angel in my life. This angel is going to change my life now. And that is when you become a fool. So be a learned investor. Even if you trade, have realistic goals. I'm not saying trading is wrong. I'm not saying that. All I'm saying is, if you trade, have some meaningful expectations from the market. Don't set unrealistic targets. Because that is when you set unrealistic targets is when you do things which you're not supposed to do. And in the process, you burn your hands by losing all the hard-earned money that you have. You don't want to do that, right? You don't want to do that. So starting with the video, guys. The first question comes from Shashank Kothari. Wherever I have names, I'll refer to them. He's asking my views on metal sector. Metal by its nature is a cyclical industry. We understand that, right? There are cycles. There are cycles when this industry will boom, and there are cycles when this industry will not perform so well. I won't say boom and recession, but there are times when metal as a whole is less preferred. Right now, what is the main reason why metal sector is not performing in India, or the metal stocks are not performing that much in India? The biggest reason for that is the economic slowdown which we are experiencing right now, and the slowdown which we are anticipating will continue for a next couple of quarters. China has again started reporting a surge in number of COVID cases. I don't know if China has embraced COVID to an extent where they don't want to lose this as a virus. They want to embrace it so hard. Every time we feel okay, now we are getting that comfort zone of coming out of this virus, and again a news comes. So many million people are again infected by COVID in China. That's how it starts every time. So till the time China economy is not recovering, the demand for metal is not going to come in from China. And China is one big consumer of metal products from India. So till the time Chinese economy is not recovering to its true potential, Indian metal demand is going to stay subdued. And that is why these companies are not reporting profits the way it should be, or the way it has done in last couple of years. And that is why you see this price correction. However, I still feel that if you want to see positive in metal sector, I always want to have at least one stock in my portfolio from metal. And if you see what good happened in most of the metal companies in last couple of years, is that when they made some very good amounts of profits, the best thing they did, rather than focusing on expansion, most of them, what they did, they got rid of large chunks of debt which they had in their balance sheet. That is one good news, because these companies from metal sector, they are highly debt ridden, and that debt is always a problem for them, because when these companies profits will shrink, that is when the interest on debt becomes a pain for them. But if during those good profits they used that profits, the surplus, for repayment of debt, so today the interest burden has drastically reduced for these companies, which is going to be beneficial for them. Even if a small improvement we see in overall demand for the metal sector, you will start experiencing very good profits for these companies, and this profit no doubt will start reflecting in higher prices for these companies. So what are my top two picks from metal sector? The first one would be Vedanta. I love Vedanta for the fact that it's a high dividend paying stock. At least that's what we have seen in last 12 to 15 months. It has paid more than I think close to 120 rupees of dividends itself. So if somebody has Vedanta, you understand how lucky you have been in last 1.5 years. And if you have been associated with me, you would have seen I have stick to Vedanta like anything, and I have always told to continue holding on to Vedanta because of the fundamentals which this company commands. And we have made massive amounts in dividends in last 12 to 15 months time. So VEDL at 297 is one stock which I would like to stick to, not for the immediate capital appreciation which I see, but for the dividends which it is paying. And if you ask me for a target, I would say the short-term target for this stock would be anywhere between 335 to 340. That is the easy 10% upside is what I see on the cards for this stock. Okay. The second pick for me, which is fundamentally a good stock but brutally beaten down, is Tata Steel at 106. Tata Steel is a very, very good stock. You can definitely have it as a part of your portfolio. Hold it for a short-term target of 125 to 130, and the long-term target for this stock. Long-term means if you can continue holding on to this stock for a couple of years, then this stock can end up paying you anywhere close to 165, 170, which, mind it, is a very good return. If you see from 2 years time horizon also, you get an average of 35% return on this stock. So Tata Steel is another good stock which I like a lot. Okay. The other things which I have mentioned about Tata Steel in my notes is FII, DI together hold 41% in Tata Steel, which is again a positive for me. And yes, the last year their profits have come down compared to 2022. But as I already explained you the reasons for that, and that is what I see as a buying opportunity. That is right now is the good time to buy these two stocks from metal sector. Okay. Next is Madhu asking me, how is the US markets going to impact the Indian equity markets? I think I discussed in comprehensive details in my last video about it. I will discuss it today also, so I will answer this question of yours a little later. Apart from that, you have asked me, how do you see the future for SBI, or how do you think US markets can have an impact on SBI? See, US markets will not have any significant impact if you see share wise on SBI, but I will say something. If US economy stands to suffer, whether it's for high inflation, it's for recession, it's for default or failing of the banks over there, or it's for the debt which they have now, if they fail on any front, the 4 points which I mentioned, then overall Indian banking sector will be under under a lot of pressure. And if that happens, then SBI is kind of a leader as far as the public sector banks are concerned, and then you can definitely expect some correction in SBI. Now, let me answer you like this. SBI close to 580 is trading right now. Okay, I forgot to mention what is the recent price for SBI, but I think it's close to 580. My suggestion is very simple right now. If you have SBI and you purchased it somewhere in the range of 250, 300, which means right now you're sitting on 100% return on your capital, what you invested, my suggestion is, for the time being, you book profits in it, because your bank nifty is at all-time high. US economy has a lot of uncertainty. Most of the European countries are already experiencing recession right now. Why not book your profits when you're getting 100%, 90% return on your capital invested? book profits. Maybe you will again get an opportunity. If you're a very long term investor, which means you can afford to not see SBI for next decade or so, आप 10 साल के लिए खरीद के भूल जाना चाहते हैं, तब आप रखिए. Then it does not make a difference if it comes down, let's say from 580, if it comes down to 500 odd levels, or it goes below 500 odd levels, we will think about averaging. It's as simple as that. If you are somebody who is not a pure investor, not a pure trader, somewhere in between, because most of us are somewhere in between these two. That's why it's very difficult to define whether we are investors or we are traders. So we are somewhere in between. We don't want to hold on to a share for a decade or so, but we don't mind holding on to a share for 6-8 months or a year even. In that case, I suggest बुक कर लीजिए प्रॉफिट्स. अगर आपको अच्छा रिटर्न्स मिल रहा है, यू बुक योर प्रॉफिट्स वंस, बिकॉज बैंक निफ्टी इज ऑलरेडी एट इट्स ऑल टाइम हाई. The more surge you see in sectors or stocks, they become more and more vulnerable to any fall which is going to happen in near future. I hope you understood what I said. जिसमें जितना ज़्यादा जंप आया है in last few months, उसमें उतना ज़्यादा vulnerability बढ़ गया है, probability बढ़ गया है fall होने का. If something goes wrong with the economy, as simple as that. You got my point? तो अगर यहाँ पे कुछ भी गलत होता है US equity markets में, then your banking stocks are going to fall, and there would be no exceptions as far as SBI is concerned. So if you really feel worried or you feel concerned about it, book your profits. If you're a very long-term investor, then continue holding on to it. You can either hedge yourself by taking put options on SBI, or you can also buy short positions on Bank Nifty. These are advanced level strategies I am telling you. Or if you don't want to do anything, then you simply hold it. If it goes below 500, you can slowly and steadily start averaging. Okay, I hope I answered you. Next is I think S. Narayan is the name, and she has asked me, what do I think about PEL and Polyplex? Both are fantabulous stocks. I'm sure you would have got hold of these two stocks, and you are now stuck with these two stocks because there has been a reasonable correction in both these stocks. First, let me discuss about PEL. PEL is basically into NBFC finance business, and recently a demerger happened of one of its organization, which became PPL Pharma. I think that's the name for this company. And PEL right now is trading around 750 odd levels. You can continue holding on to this stock with a target of at least, I would say, 875, 880 to 900 in mind, and the long-term target for this stock would be around rupees 1000. Even PPL Pharma is trading around 85, 86 rupees, I guess, and that is a very good stock. I personally tracked that stock. When it got listed, it listed around 160, I think. From there, it dropped down to 70 odd levels. This quarter, the results were good, because of which we saw some resurgence in the stock in last couple of sessions. But even at this price, I would still say it's a dirt cheap share to buy. PPL Pharma is a very good stock. If you have PEL already with you, then there is no point of buying PPL Pharma. Then you can consider doing fresh buying in either of these two stocks, that is PPL Pharma and PEL. PPL Pharma, again I am repeating, at around 85 rupees is a good stock with a target of 125, 130, and PEL is a very good stock at around 750 rupees with a short-term target of 880, 885 and a long-term target of 1000 rupees. And secondly, she is asking about Polyplex, one of my favorites. Even in my Mohra trades last year, 2022, the only one stock which did not do its target was Polyplex. And Polyplex right now is trading around 1366, trading almost at a 50% discount to its all-time high. I don't think all-time high, but 52 weeks high is 2670, and it is trading around 52 weeks now, almost at 52 weeks low, or maybe close to that. Book value for the stock is around 1700, which means you rarely find stocks with Nifty being at 18500. You rarely have stocks, which are trading at a price to book value of less than 1. But Polyplex is one such stock. सो आई पर्सनली सजेस्ट, जिसके पास नहीं है वो भी पॉलीप्लेक्स खरीद लीजिए, 100% खरीद लीजिए, because last week once they declared the results were definitely not up to the mark, because of which you saw more correction in the stock. Moreover, promoters are selling a part of their stake, which again, when promoters sell their stake, people are the shareholders are not very confident about it. Suddenly, why did the promoter sell the stake? Have they started losing confidence in their own company? But it's not so easy interpretation. Sometimes promoters may sell stake because they may be in need of money, or they may have some expansion plans in mind. So they want funds, they don't want to go for debt, they want to raise money through their own stake sale, and they want to use that money for growth of the organization. So there are a lot of things, a lot of reasons why they would have sold, and they did not sell at a bad price. The price which was trading on Tuesday, they almost sold at 17-18% premium to that price, which means jisne kharida, the person or the investor who bought the shares is willing to pay 20% premium for the shares right now. So what I'm saying is, ideally, theoretically, at least that 20% upside is left in the stock, right? So 1366, if you have it at a higher price, average at this price. Average, definitely average. If you don't have Polyplex, eyes closed, go for it. It's very good. A business of into the business of packaging, and they are operating in more than 265 countries, I think, or maybe they have 265 different places of operations. They have their operations globally, that is in European countries, then they have it in US also. Because of the recent crisis in Europe, they lost some of their business. That is why numbers are not very attractive in the last couple of quarters. But having said all of that, the current price justifies everything. So you can definitely consider buying it with a short-term target of 1700 rupees. So there is a good upside in the stock, which is 20% return is the minimum I see in the stock. Okay. Next question is from Dharmesh. If US declares a default, not happening, so I'm not discussing this. This will be answered in the remaining in the second half of my video. So this is not happening. US does not declare a default. Good news. Somebody asked me, Merlin asked me, how do you think about Affle India? Good stock, sir. You can buy it. I saw the fundamentals. There's nothing objectionable in this stock, although I personally don't track this stock much. But since you asked me, I went through the fundamentals and I didn't find anything wrong with this stock. The decent jump in its revenue and profits in last few years. Around 880 something is the price, if I remember correctly. You can definitely consider buying it with 15 to 20% upside. That should be your ideal target for this stock. Harsha is asking me, equity for financial freedom. Do equity for making additional returns, for sure. When you use the word financial freedom, your financial freedom has to come from your main source of income. And I personally always suggest this: equity should not be your main source of income. If equity is your main source of income, then it puts which means you're a full-fledged trader, then it puts you under a lot of mental pressure of performing, and that is when we commit a lot of mistakes. So ideally, you should always first look for a job or a business, or you should be a professional. Out of your savings from this income is where you should start looking for equity as a passive source of income for yourself. That is other source of income, secondary source of income. But if you're planning to do equity only for financial freedom always comes from your main source of income. Equity can be used as a secondary tool to diversify your money. It should be your second source of income. But you cannot attain financial freedom just by doing equity, or you have a lot of money, because only a lot of money can create a lot of money. You understand my point, what I'm saying? So in gist, if I have to say, don't get carried away when you say this, that I want to attain financial freedom by doing equity, because that is when you start putting yourself under a lot of mental toll that I have to do everything possible. FNO karunga, options karunga, short positions create karunga, short selling karunga. I will do everything possible on earth in equity just to make that super normal return. And that is when you start doing foolish things. So don't do that. Don't put yourself under a lot of additional pressure that equity has to do some magic for me that is going to change the standards of my life. Does not work like that. Okay, it's not crypto. Understand that. So kya crypto kar le, sir? Please don't do that. That again can be used as for diversification purpose. You want to put a very small portion of your income into it, you can consider doing it, but I am no expert to answer that question. Girish is asking me, what books do you recommend for gaining more knowledge on finance? I personally like Aswath Damodaran. He has got some very good books on corporate finance and valuation. He also posts a lot of videos on YouTube, so consider listening to his YouTube videos. And you also asked me what other YouTube channels I can follow. Follow KP Sir Knowledge Power, and apart from that, I can't endorse other channels because I haven't come across any channel which is sharing genuine information. Please understand, it's not that I am the only genuine person on YouTube. I'm not saying that, but you as a learner or you as a student, for you it is very difficult to differentiate between somebody sharing genuine information with you and somebody not sharing genuine information. So how do you distinguish between that? So go for Aswat Damodaran and listen to his videos on YouTube, where he does a lot of number crunching and breakdown of data for different companies. So that will be helpful for you for learning sake. Because he does not make any false promises. If you listen to my videos, you will make hell a lot of money in the equity markets. So it might sound boring to you, but it is very, very high on knowledge. That's it, guys. So these are the questions which I wanted to answer. Now comes, where does US stand now? See, I spoke about debt ceiling part in my last video. US has $31.5 trillion of debt. The point was, Biden, who represents the Democratic Party in US, was in continuous talks with Kevin McCarthy. I hope I pronounced his name correctly. This person represents the Congress Republican in US, and he's also a speaker in the White House or something like that. And Kevin McCarthy was the opposition party. Kevin McCarthy was continuously in talks with Biden, where the discussions were happening whether they want to increase the limit of debt ceiling, because if they don't do that, then there is something called as X date, and the Treasury Department, there is a particular lady whose name I don't remember right now. She made it very clear that the X date is fast approaching. X date being the date beyond which US government will not be able to pay for its bills. So all kinds of payments, the insurance payments, the military payments, the wages, the salaries, or the pension funds, whatever money is due from the government will fail to pay that. So what is the need of the hour? Continuously meetings were going on since last 1 week, that the debt ceiling should be increased. That's what Joe Biden was asking for. Now, I posted also on different social media platforms that ultimately they have to increase the debt ceiling, because they will not allow the country to go into default. But Congress, that is the Republican Party, was making one claim that why should they agree to increase the debt ceiling when so much of debt is showcasing the failure of the US government, the present government, which has Joe Biden as its president. So what they wanted to say was, debt ceiling should be increased because we might be ending up into a default otherwise. That is okay. But why did we land into this situation? Now see, I told you earlier also, Joe Biden is not the only person responsible for so much of debt. The US debt has been on a high for last 15-20 years. But what did the current government do? So from the time Joe Biden was appointed as the president, we had a lot of problems already going on. The COVID was there, then the stimulus had to be given, then the recession, inflation, everything was parallelly going on in the economy. So there were, at macroeconomic levels, a lot of problems were going on, because of which they had to face this kind of a situation. Now, they have agreed upon this, that for next 2 years, the debt ceiling will be raised, and the US government over the period of next 6 to 7 months is planning to raise $1.1 trillion. That is what I read in a report of JP Morgan, that they are planning to raise up to as much as $1.1 trillion. But there have been a lot of conditions being imposed by the opposition party. That is, Kevin McCarthy has imposed certain restrictions, that you cannot keep raising debt and not cut down on your expenses. So you will have to cut down on your expenses. Apart from military expenses and some compulsory food expenses or something, all other expenses they will have to cut down, and to which Joe Biden has agreed. That is why this kind of a deal is going to happen now. So they will be allowed to raise more debt for next 2 years. This agreement has been done, but they will have to cut down on a lot of their expenses. Now you see what happens. Now I'm telling you something very important. US government, in order to raise this money, $1.1 trillion, will have to issue bonds. That is treasury bonds. Bonds sponsored by government. This is one very important aspect of today's video, and very technical also. So listen carefully. US government will have to issue bonds to raise money. Corporates, retailers, everybody would like to invest in these bonds, because these bonds are better than keeping your money in banks. Because banks can default, but the probability of a government defaulting is less. That's what I've been discussing with you for last 7 days. So when they want to invest this money in government bonds, people will start pulling out their money from banks and start putting this money in bonds. Correct? You understand my point? So when people start pulling out money from banks, the deposits of banks are going to go down. And if deposits of banks are going to go down, then again banks will have cash crunch, liquidity crunch. So if banks will have liquidity crunch, then what is going to happen? Banks will have to increase interest rate to offer money. When banks have more funds, they will offer you at lower interest rate the credit. But if banks have less money, how do they offer you credit? So they will again charge more interest. In an economy where interest rates are already very high, if you again charge high interest rates, that is again ending up to a higher interest rate situation. This probably has not been factored into equity markets. So debt ceiling being raised for next 2 years, is this a good news? Yes. But is this actually a good news for the share market? Probably no. And that is why I am telling you that we are in a market right now where we have to exercise a lot of caution. Nifty at 18,500. Bank Nifty at all-time high of 44,000. Nasdaq at all-time high, 52 weeks high of 13,000. These things are making you feel that we are probably going into setting up a new records. We may even experience new highs, but as an investor, you have to be very cautious right now. As somebody who does FNO, you have to be very cautious right now, because what markets are not factoring in, debt ka issue hai, US government will default, US government is not going to pay their bills, this, that, blah, blah, blah. And then suddenly a news comes, debt ceiling has been raised for next 2 years. And you start celebrating, you start buying more into Indian equity markets. But what happens? What happens as a result of raising this debt ceiling? Is that banks will start drying up their capital. If they start drying up their funds, then what happens next? The money will be not available. And if money will not be available, then money also moves out of equity markets. Please understand that. If there is a liquidity issue in the market, money will also go out of equity markets. And that is when corrections will happen in the equity markets. I hope you understand my point. This is very technical, my friend. You need to understand. Equity markets for sure have not factored in this. Debt ceiling limits will be increased. Time to celebrate, buy more and more. No. If debt limits are increased, US government, the first thing US government will do is they will issue their bonds. People will buy into these bonds. The money is going in the hands of government, from the hands of people. Through who? Through whom? Through banks. Liquidity issues are coming in. When liquidity issues will come, there is not abundance of money in the economy. Share markets also will have to adjust. It will happen. So we have to exercise a lot of caution. Markets are sitting almost on the verge of new highs, more vulnerable to fall. One bad news, markets will fall. We have to be prepared for it. Not just this, listen to this now. April consumer consumption, April consumer index of buying has gone up. It is much more than what was predicted, which means even with 10 consecutive interest rate hikes, US government has not been successful in controlling the consumer buying power. If consumers are going to buy more and more, how do you control inflation? So till last month, listen carefully, there is Fed fund futures. They have done statistics. 62% chance of no further hike in interest rate and 38% chance that there will be hike in interest rate. These numbers have now toppled, and these numbers are now, there is a 65% chance that interest rate will again be hiked in June. If on 14th June meeting, Federal Reserve declares that there is another hike in interest rate, once it will be taken very, very negatively, because markets have now started assuming that all interest rate hike nahi hoga. There will be no more interest rate hikes. So it is a little dicey situation right now, guys. So what my suggestion is to exercise a bit of caution. If you have to be very specific with your stocks selection, like for example, I keep saying buy IT, buy IT, buy IT. But now if you're planning to buy IT, you will not buy LTIM at 5,000, because from 4,200 it has gone to 5,000 levels very fast. Persistent you won't buy, because from 4,000 to 5,000 it has gone very fast. You will not go into buying LTTS right now, because 3,200 to 3,900 it has done very fast. Infosys still okay if you plan to buy Infosys in small quantities, because it has not shown a lot of recovery from lower levels. TCS is okay. So you understand, you have to exercise caution. कौन सा stock खरीदना है, किसका fundamentals justifiable है, that you have to now evaluate. If you are very risk averse, it's better that you wait and watch for next 7 to 10 days how things, at least till June 15th, you wait. And then you start taking aggressive trades. But till that time, you have to exercise a lot of caution. Because interest rates were not expected to be hiked further. But now the kind of situation we have, we feel interest rates will again be hiked in June. Because consumer buying power is still on a very high side. If consumer buying power is still on a high side, you will not let inflation come down. Then the overall objective of bringing down inflation to 2% for US is not looking like achievable. Plus this debt ceiling, liquidity crunch issue, I already explained to you. Plus all indices are already sitting at its 52-week high. So the upside from here looks a little less of a probability compared to a swift downside. I am not being bearish on markets. I am just trying to caution you on what probably can happen, right? So you have to be very smart with your pick. Plus, January and February, the FII was a net seller in Indian equity markets. But January and February, okay. But March and April, FII bought into Indian markets. And May month, last 10 days, they have done continuous buying in Indian equity. But on the contrary, DII is selling in Indian equity markets. DII has been sellers. Means they have done mixed kind of a trading. Sometimes buying, sometimes selling. Sometimes buying, sometimes selling. Which means they're playing it very smart now. मतलब वो होता है ना full blown confidence. नहीं खरीदेंगे, सिर्फ खरीदेंगे. अभी खरीदो, 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 खरीदो. It's not like that. They are buying, they are selling. They are buying, they are selling. They are also smart enough to book profits. Are you smart enough to book profits? That you think? US FII buying into Indian equity markets, I can develop some kind of a link that, okay, probably what happened, they were very uncertain about things in US back there. So they thought, okay, chalo, koi underdeveloped country pakadte hain. Last year, China mein bahut paisa lagaya. We already put a lot of money in Chinese equity last year. So this time, okay, let's do some favors to Indian equity by investing in Indian equity markets. Because some shares till 10 days back were available at very cheap prices. You get my point? So even now there are shares which are cheap, and whatever best I can share with you, I am sharing. But anything and everything I can buy, that kind of reckless behavior is not going to be acceptable in this market where we are surrounded by uncertainties. You get my point what I'm saying? Okay. My top pick today, fundamental pick, is Tata Chemical. Gem of a stock. 17.5 dividend declared in last quarterly results, that is the year-end results. Book value of 752, currently trading at 970. Price to book value ratio only 1.29 times. Stupendous. Stupendous. You get a stock with a book value close to 1. Eyes closed, go for it. Just like I told you for Polyplex. PE ratio of 10 times. In this expensive market, if you have a stock with a PE of only 10 times, when the Nifty PE itself is 15-16 times, it means the stock is really underpriced. Face value 10, massive EPS of 91 rupees. That's very good. For a face value 10 rupees stock, EPS of 91 is very good. 52 weeks high 12.15, right now available at 970, which means almost like 20-25% discount from its high values. Promoter is holding 38%, around 35% is held by FII DII, and rest is being held by public. If you compare from March 22 to March 23, on annual basis, the consolidated numbers, profits have gone up from 1174 crores to 2436 crores. 1174 crores to 2436 crores, available at 970. I give a strong buy recommendation on this stock with a target of 1070 to 1080. That is my first target for this stock. If you want to go conservative, profit booking karna hai, anything over and above 1050 you can book. But I feel if it starts showing the upside momentum, it will probably go up to 1070-75. But anything above 1050, to be on a safe side, you can book profits if you get it at 970 rupees tomorrow. But I'm making it very clear, based on my last week's video, no unrealistic expectations, guys. I'm making it very clear. एक हफ्ते में targets होगा sir? नहीं, I never say that. I never say that. Okay. हो गया, if it happens, good for us. I always try to give you stocks which are fundamentally good and carries a lot of momentum. But it will always happen. Seriously, I don't have that skill set. I don't have that skill set, okay? Actually, nobody has, but I can say only for myself. Now, I'll give you two stocks which you should keep in your watch list, and a small SIP kind of investment can be done. One is the Z Entertainment. at 190, almost had a 52-week high of 287, available at 100 rupees discount from its all-time high. I mean 52 weeks high. Z at 190 is a very good stock. Last quarter results were not good. That's why I told you not to do, full-fledged buying into it. A small SIP kind of an investment can be done. At 190, you can definitely buy this stock for a target of 225, 230. Friday, a news has come. Z was basically supposed to merge with Sony, but that deal was put on to hold because of some NCLT issues and all. But now they have been given a clearance that they can go ahead with the merger. So that price impact still hasn't come into the picture, and stock was already under a lot of pressure because of this kind of NCLT objections and all. So this stock looks good to me to be kept in the watch list and to be added in small quantities, for SIP purpose. Next is Page Industry, which the jockey brand of apparels, right? This is the company for that, Page Industry. The results were not bad for this quarter, but it was less than expectations. The stock had a 52-week high of 54,350, but it has done its 52-week low on Friday, which was 34,000 something. But from there it recovered and came up to 37,500. But still it closed 8.5% on a lower side on a intraday basis. I'm saying don't do massive buying again into this stock, but you can slowly start accumulating this stock because fundamentally it's a good company and it has a very dominant share in the market to the industry to which it belongs. So Page Industry at 37,500 with a target of 42,000, 42,500 looks good to me, which means 10 to 12% upside is looking possible. थोड़ा डाउन साइड आ सकता है, तो उसके लिए मेंटली प्रिपेयर्ड रहना है कि अगर डाउन साइड आएगा, विच मीन्स इफ इट गोज अगेन 34,500 इट डिड एज 52 वीक लो, इफ इट गोज बिलो दैट इज व्हेन वी विल थिंक अबाउट एवरेजिंग. इन माय फॉलो अप वीडियोस आई विल डिस्कस अबाउट इट, बट इफ यू बाय एंड यू आर लकी इट मे इवेंचुअली गो अप टू 42,500 एंड दैट इज वेयर वी विल बुक प्रॉफिट्स. ओके, स्मॉल क्वांटिटी, इसका तो बड़ा क्वांटिटी ले भी नहीं सकेंगे, 37,000 का शेयर है, सो यू वोंट बी एबल टू बाय ह्यूज क्वांटिटी. High beta, high risky trade. I'm giving you all segments. Fundamentally, top pick Tata Chemical. Watchlist kind of a stocks, SIP kind of stocks. Z Entertainment at 190 and Page Industry at 37,500. And high beta stock, that is high risk stock, would be Adani Transmission at 850. Adani Transmission at 850. Good time to start accumulating. Still trading at 75% discount from its all-time high. Still. It has not shown the kind of upside it should have done, just like other Adani stocks did. The one big reason for that is MSCI का rebalancing हुआ था, in which the free float for Adani Transmission was reduced, because of which the stock was under pressure. So I feel Adani Transmission is a high beta trade, but you can definitely consider buying it at 850 with a target of 1,000, 1,010 in mind. But it will be a high risk trade. Okay, so you are responsible if you take it. Okay, so this is how the video ends, and I again failed to do a short video, but I made 2 or 3 shorts last week. So what all you have to do, listen to my vlogs very, very carefully, because vlogs will provide you the maximum knowledge. Listen to my shorts, which are more like a follow video, or if suddenly I have to share something very important, I will try to put it in the form of shorts. Where all do I post this? I post it on YouTube, I post it on Facebook InvestorWise page, I post it on Instagram, I post it on LinkedIn. Everywhere I try to post it. I post it with my database also on WhatsApp. If you are still not following, you please follow KP Sir Knowledge Power page on YouTube. Please share my videos with other people so that more and more people we can reach out to through this medium. Apart from that, I also sometimes write the blogs kind of a thing. Those messages are also very important. Each and everything that I share with you, please take it seriously. Apart from that, for those of you who really want to learn about equity markets, that is not the theoretical side of it, how practically theory can be applied into finance. For that, we have the Equipedia course. We have a course full-fledgedly on the fundamentals. We have a course on the FNO segment also, how strategies are done, how spreads are created, what is the intention, what is the mindset, how risk hedging can be done, how portfolios can be protected. We have a course on that. What does this course promise you? It promises you top-notch knowledge. Does it promise making money? No, I never promise you making money. I promise you top-notch knowledge, and only with top-notch knowledge and experience is when making money in equity is possible. Otherwise, it's all living in a fool's paradise, you know. Okay, guys, till we meet again, bye bye. God bless all of you. Lots of love to everyone. Cheers.